Hello everyone, welcome to another weekly market review. It is the 13th of July 2020 and crypto's been going absolutely ballistic. It is showing a potential of a long-term trend. Let's see how we can play it. Here's the total market cap chart. We're looking at it straight at the 4 hour because essentially this is the game plan that we were watching, where we had tested this H4 block that we had been looking at, and price was just sneaking out of this while we were making the review. And I had clearly mentioned this 258 daily level along with this VWAP forming this inverted head and shoulders was key, and we broke out with pretty strong volume on this. So for now, it has perfectly realized the target, and we did have targets for the bull flag as well from last week. I'll quickly look at that, but what else I will look at is what we've done since then. Since the breakout, we have made a perfect 0.5 retrace, held the weekly level, and a broken market structure, built higher highs, and currently we are looking to break out from here. Another key thing that we did is here this was the downtrend line that we had been looking at. So there was confluence of a retest along with the other levels we have. For the VWAPs, you can see now bulls are completely in control because we turned into support what was previously resistance since quite a long time. The last move out of here we had was very quickly rejected. You can currently see from the same level this was a very big rejection, and the current rejection we have has been much smaller, and we have ended up finding support at a key weekly level. So for now, everything is looking like there is potential for further upside. There are a lot of individual plays going to be sending some more invites for the Discord this week as well. If you did not catch any last week, we've been catching most of the major moves, at least on the coins that have margin, because essentially I still do play a lot of margin, and that's what I prefer. So we did end up catching most of the big moves. We've got Link, we've got Doge, we've got Tezos this morning. So all the big moves that have happened in the last week, a pretty decent percentage of them has been called in the Discord. So be sure to keep a lookout for an invite. We will be sending some more this week. Apart from that, we're looking for a breakout and a retest of this 270 level. I think that's going to be the nail in the coffin for the bears. But essentially what was very key was this 261 level holding, because you can see we failed to hold this level. Essentially since the big break in the middle of June. Since we got up here, again and again I had been reinforcing that this is the level we need to end up getting above. And finally, I think what we have done now is spent a bit of time here and held this level for a couple of days. All of since the 10th we had this bigger correction after the move. Price has been looking forward to just grinding. These alt BTC pairs have been shining while BTC has been going sideways. This move on the total market cap is all altcoins. BTC has still been waiting and going sideways while alts do what they have to. I would say, this is guilty until proven otherwise. So we should carry on riding the trend. There's very significant metrics over here because we've not had this all the way since 2017, what we are experiencing right now. So I think it's pretty critical. It is important to have a strategy to figure out how to maximize the profits from moves like this. So we will discuss in today's review. certain things to look at, and how to be able to define what needs to be done. Here's the altcoin market cap. This is what we were looking at last week, this flag. And what we did is we broke up above a rising flag. So this is a very bullish sign for the market. And essentially, eventually what we did is broke up above this flag, tested it as support, and confirmed a continuation. Apart from that, what else we did is we built quite a shallow retrace, a 382 retrace. And currently what we are seeing is continuation from there. So the 382 retrace is the confluence with these tops. It was quite a nice dip to buy. Also, we manifested this target of this inverted head and shoulders. For now, what else we have is the target for this flag. So if we classically chart this flag, we still have about 108 billion, 110 billion as a target. For now, one resistance we might find is the 100 billion resistance. I think we could still build some kind of structure here, but you can clearly see, so it has been so since May, but also April we had strength in altcoins. We did have a bit of a sell-off in May during the halving, but since the halving dip we got another very strong move. We've had a month of consolidation and then continuation again. So this kind of market structure, if we look at it on a higher time frame, I wasn't showing a higher time frame because this wick on TradingView, I hope they fix it. This is not a true wick. Price did not get there yet. But what you can see, which is different from this previous rise that we had in February, which was straight up, it was not building any kind of structures. But you can see that we had a nice impulse in April, and then we built a structure. Again, it was about 3 to 4 weeks of consolidation, another move up, another 3 to 4 weeks of consolidation. So this is reflecting strength, guys, because the bears have been trying to sell off this market, and it just carries on. This is the reflection of a construction of a trend. This is how these kind of moves took place. We had long periods of consolidation and a move up and then reconsolidation. So we have not seen that in altcoins since quite a while. 2019, you can arguably say we did have similar structures, but what you can see is the moves were much more impulsive. So now what we've had is this very steady, slow kind of moves up, which is much more sustainable. It is not these huge green candles which leave a lot of voids and a lot of space to fill. Apart from the recovery which we had in March and April, and that too, the lows have been defended for an entire month. So it is a very different kind of structure that this market reflects. But for now, yes, the most immediate target is this 108, but we should expect about this weekly level, this 101 to 103, also to start giving some kind of a resistance. Considering the kind of moves we've had, guys, I think it is prudent to really manage your risk. It is always prudent, but these moves have, on a lot of coins, have been very stretched. So if you don't manage your risk, there is still a lot of downside on the coins that have moved hard. So please make sure that if you have been taking trades with us in the Discord, or you've been taking trades on your own, to keep trailing your stops, so that the time when a bigger correction comes, you are safe and well in profit. But nonetheless, this is very significant what is going on in the crypto market right now, and I think it's important to take note and important to be able to be a part of this, because this is what this is what crypto is about. It is about these big gains, the potential of big gains that is possible, that have been promised since a long time to many. But the most important thing is to still be able to manage your risk, because what you should know is that from 2017, many people were not able to keep their gains. So it is more important to be able to keep what you make rather than just make a lot. That's what will make you and turn you into a trader. So make sure to trail your stops, keep uh, staying keep staying alert, and don't be greedy. So the Bitcoin chart as well. I mean, we've been going sideways, so a higher time frame chart will just show you a lot of sideways candles. But essentially, again, we had a stop run here. This is about where we were in the previous review, and all we've done is made that slight move. Of course, alt BTC has outperformed, and there has been correlation for alt BTC against BTC USD. So that's one key thing. But essentially, what we are looking at is this daily block, this purple daily block, which has a lot of confluence with the previous weekly open and the monthly open. So this is a big cluster of support. After what we did here, this is very key, and essentially, even though it is a bit dicey, but this is the place to be managing risk. And I think as long as this block holds, this is all bullish for BTC. Apart from that, guys, just think about the mechanics of what is going on right now. What you're seeing is a lot of alt BTC pairs that are moving hard against BTC, which essentially means that they are the market makers for those markets. The whales that hold those coins have decided to pump them, and the main objective for altcoins is, guys, to accumulate more BTC for when the price of BTC increases. But because you have to understand, for whales, the real liquidity to get in and out of these markets with fiat is BTC. So what they are projecting is that BTC is currently at a value which they found fair for their alts to pump, and eventually what happens is BTC will move, and it is possible that alt BTC gets a big correction that time, or it is possible, like 2017, that alt BTC goes along with BTC USD. We have to see what happens, but once BTC moves, they will be generating liquidity in the Bitcoin market to be able to cash out these big gains that they're making on alts. So for BTC, guys, this is the big block, and as long as this is holding, I think it is prudent to be looking for further upside. We did get quite a strong rejection. There was a lot of confluence at this level. We have a monthly pivot. We had this VWAP. This is the previous monthly open as well, and it is also a golden pocket. It was also a golden pocket. So this was a very nice confluence. So what I would say is, considering the rejection that we have got over here from BTC, once we do turn this into support, you would know that BTC may also be ready to follow the altcoins, and essentially that's when things would get interesting for alts, because if they end up continuing while BTC is moving up, that would be very 2017 like. But if this is going to be all BTC and money is flowing back into Bitcoin, that would be an interesting give and take. So nonetheless, guys, the logic for what I'm talking about and why even a consolidation like this would now be bullish on BTC is considering what the altcoins are doing. So do keep the mechanics of this in mind, and what crypto mechanics do for this, because a lot of people would be just charting BTC on its own, and you see that we chart total market cap and the total too, and this is the reason we do it, because the underlying mechanics of cryptocurrencies are pretty different from what you imagine it to be. A lot of people just chart BTC on its own. I think it on its own, this chart does not mean much unless you can give it context with the other two charts that we look at every day. So just keep that in mind. Keep this in mind, that if alts are going, then the whales have decided that this is still cheap enough. BTC at these prices is still cheap enough. So that should be quite exciting for all those people who have been in this market since a long time and who understand the way the cycles of this market move. So for now, BTC, as long as this holds, we can be looking for further upside or further consolidation. I did share a metric on my Twitter. So previous halving, BTC went sideways for 150 days, before eventually making the big move out and breaking market structure. So we've had 60 days of sideways for now, and we can still be betting on the volatility to expand at some point. But I think the true expansion would possibly not take place until we break this 10.4, 10.500 level, or we break this 8600 level to the downside. So until that happens, you can still bet low time frames on volatility. FTX is a great way to do it. Options is a great way to do it. You can also be making money on no volatility, and you have inverse volatility, which has been on a constant uptrend since the halving on BTC. You can play that on FTX. It has made a good about a 60% move. It's on a constant uptrend. Or if you are a fan of of betting that this may be it, and now is the time for BTC to make the move, you can get the volatility tokens, which are also available on FTX, which have been on a decline, about a 70% decline since the halving. So they are quite cheap, considering what the historic volatility of BTC is. But do read up on how these tokens work so that you understand the mechanics better for this. So nonetheless, we have also a very important diagonal coming in to BTC. Should get some kind of interaction with it, and key points for really looking for expansion to the upside is, once we do find support here, this 9580, 9600 level, you can see we tried to hold it as support. We were not able to. Considering how high the total market cap is, that would mean if BTC is moving here, easily the 270 level on total market cap would be turning into support, which would be very bullish for that upside continuation and target that we have for total market cap. So looking at large caps against BTC, and what you can see very clearly is what we've done is we have not only made a higher low, we've made another higher high, and we have taken out the high that made the low. So we have broken market structure on the weekly time frame. What you can see is that we did this in December, but what we did is we made new lows. So what we did is we built a range essentially. But for now, I think the true breakout of this range takes place once we take out this weekly level up here. But the early stages of the inception of this trend are very evident, and this is guilty until proven otherwise. And a break in weekly market structure on altcoins is it is something that you do end up getting. So you can see we had this drop in August and December 18 all the way till April. We made this high. In May there was this higher low that we had made, and eventually what price did is got that little bit of a bounce and made new lows. But there is a certain difference in the kind of structure that we have built, because you can see that there was no market structure right here, and in terms of alt BTCs, now you can see very high time frame support levels that have been created here. This 2020 yearly open, It's quarterly open. These are high time frame, these are very high time frame support levels. Also in terms of market structure, we have been in this range all the way since August 2019, so this is nearly a year of consolidation before what price is trying to do. So just in terms of structure, you can see this is what is looking like a nice base, and the actual confirmation for what we would get is once price does end up getting above this. So once price is above this weekly level where we ended up making these Feb highs, and we turn this into support, we instantly get a target for this move, which would then take us close to these lows up here, or at least to these lows. Yeah, so this is the technical target we would get once price can break out of this base. But this is what a base looks like. This is what a base is, and there is no confirmation that this will happen. But for now, because we have that break in market structure, it is something that looks quite significant. Let's look at it on the daily. What the other signs of strength here is. So on the daily, let's look at what we got. The other sign of strength here is you can see the momentum. So we have made a higher high, but the momentum has also followed along. So this is what is reflecting continued strength. Just diving and looking into it a little bit deeper, I think we would be able to see this better on the 4 hour. But on the daily, what you can see is, first of all, this is the 200. This is the 200 EMA on the daily, which we had been finding resistance on. We broke up above it, found support. The 300 EMA, last time we did not sustain price above it. So let's see what happens once price does get above it. This is the yearly VWAP also, which was in confluence with this 200 EMA, which was finding resistance. You can see we are now well above it. Another anchored VWAP that I want to look at is something from this range. Yeah, so you can see this is also something that worked really well since price entered into this range. What it has been able to hold it down at key levels, and again we are above this. So basically, in terms of whatever volume can show us within this range, we are above all the average consolidation that happens here. And generally, all that reflects is, first of all, that the bulls are in control, and second of all, the potential of what could take place. Because what this anchored VWAP is showing us is that this is around this monthly level is the average price for this consolidation, and this is large caps against BTC. So once the market maker has taken price above his average consolidation, the probability of moving out of this consolidation always increases. It does not always take place, and price can go up and come back down, but the probability does end up increasing. Let's look at the 4 hour. So on the 4 hour, what we can see is again very aggressive expansion. And also again momentum was very high on this move. We had a strong move, but on bullish momentum. This is not bearish momentum. And you can look at the consolidation. This is a very aggressive consolidation. If we are mapping out the moves, okay, we had the first move, very shallow retrace, just a sideways consolidation, like it was a rising bull flag. I'm just gonna move a couple of things. So we had a rising bull flag over here, and we broke up and built such a strong move from it. And now you can see that again this is reflecting that we have a consolidation that's taking place. So if we do end up getting this breakout from this rising flag as well, that would be extremely bullish. but for now you can see that it is a rising wedge straight into resistance. So this is something to be very careful about. I think people may be getting a bit carried away, but you can see the kind of structure we have. If this does break up above this and test this as support, then you can you can bet on a continuation. But essentially we've had a couple of legs up with very shallow retraces. So this is what an impulse looks like. It is very impulsive, and for now I would feel that if we are to get that rejection, then this monthly level is the level which is in confluence with this VWAP, this yearly VWAP, this anchored VWAP, also the 200 EMA. All of it comes in confluence to this monthly level. So if we do end up getting a sell-off, which would be for two reasons: either BTC drops or BTC makes an impulse, this would be the big level to look for. Historically, if you can see, this is the place last time price tried to find some kind of support. So you can chart this on your own, guys. The formula is right here for you. I think this is very significant and it is very useful. So just look for this. For now, this is just a rising wedge, which does look a bit dangerous. So until price breaks up above this and tests it as support, I would not trust this, and I would trust for price to come back down and test this monthly level, which would be very key. So I would say around this 53,000 sat level. This is about where we found support on multiple occasions before breaking down. So this SR flip will be very big and also very significant if we pull our fibs, and this is where price has to top out. Also, it matches up with the 382 and the 0.5 fibs, which are again the bullish fibs for a retrace. So again, guys, new things happening in the market. It is shifting, and it is showing its structure and its intent. And I think it would be pretty hard to be bearish on cryptocurrencies, witnessing what we have been since the lows of March, but more significantly since the lows of May and post the halving, what alts have been doing. So just keep a lookout. The game plan essentially for us should be to monitor the correlation. As long as the correlation between BTC USD and alt BTC is positive, it makes complete sense to play altcoins. Nonetheless, what I would say is maintain some kind of BTC exposure, managing risk from that daily block that I have spoken about. Maintain some BTC exposure for a couple of reasons. One is that once you do take profits on your alt BTC pairs, if you do get a retrace, you have ammo to buy. And secondly, if BTC does make a big impulse and alt BTC fails to maintain correlation, then you would still be preserving your gains, and you can then eventually have tight stops on your alt BTC pairs and get out of your alt and move fully into BTC. And the third is that if the market completely has to drop, then you should have enough liquidity to be able to get out of the market. So for all of that, BTC exposure is prudent, no matter how the market is moving right now. So just keep a lookout at this, guys. And this is a bit of a dangerous looking rising wedge onto a key weekly level. You can see the last couple of times we've had strong rejections from this level. So just keep a lookout at it, and in case we do end up getting a correction, look at this monthly level for a retrace. We're looking at the S&P 500, and what I wanted to show you was, yes, of course, last time I spoke about us holding this daily level. We got a decent week the starting of July, but since then we've basically gone a bit of sideways, while the Nasdaq's been making all-time highs. So in terms of relative strength, it is different, but very importantly, guys, look at this. So we had big resistance here, big resistance, you turned it into support, confirmed it, and if we do get another push up, this confirmation is further, it's further successful. Apart from that, we have what we call a golden cross. You do not use this, to take along. It's a very lagging indicator. But what I do want to show you is that in terms of its support for the building of something which is like a trend, you can see that each time we have gotten a golden cross, there is significant trends. This was 2015 was the only time we had a completely failed golden cross. Outside of this golden cross over the last few years, it has given some kind of a sustained move on the S&P 500. So I think that is quite significant. You can see each time we're getting a golden cross, there is a sustained move. This 2015 move was the only one. I don't have pre-2003 history on this chart, but nonetheless what it shows us is, I would say there is an instance of somebody recording this, but I think it is about it is quite a decent sample size of more than 10 to 12 or possibly 15, where something like a golden cross has been able to give a sustained trend. So it is somehow significant, though of course lagging. You cannot buy on a golden cross. I think post a golden cross, whatever moves you get, if you do end up getting a retrace, a lot of times close to the 200 simple moving average, that is the buy to get. So you can see you had the golden cross, price sold off close to the 200 MA. It's a good buy. Every time price has been selling off to the near the 200 MA, golden cross, price sold off 200 MA, a decent buy. So essentially this is not a bad strategy, especially when price is in the initial stages of its trend, because that's generally more when it does end up hitting the 200 SMA. You can see once price is trending strongly, a lot of times you don't get it. You'll have to readjust your moving averages to find out what moving average is supporting price here. But we have been going sideways since quite a long time. It is essentially 2018 since price has not really trended up. We did get decent trends, but we've had decent sell-offs. We have not had what we can call a sustained trend yet over the last 3 years almost. So I think if we do even if we do end up getting a move up from here, whatever the next sell-off is, I think if the SMA is close to this 3000 level, that would be depending of course on the magnitude of the move, and if we do end up getting it, this would be the place to be watching. And on the other hand, of course, should be looking at this, but you can see the kind of cross that we've had is slightly different to what we got over here. But nonetheless, if you see price falling back down, dropping below these MAs and this 300 level, I think it would be significant to say that this rally is done for. But for now, Nasdaq is making higher highs and higher lows, and S&P has flipped a major resistance into support and is currently looking to trend up. So nothing wrong with this trend, until it starts to prove itself. There's a lot of decent plays, a lot of very strong trends. Tesla was absolutely incredible. We did play that in our Discord. We called it on a breakout and retest. We got about a 40% move from that. Unfortunately, only holding quite a small portion of it now, and it's still going. Never doubt Elon, I guess. Also a couple of other nice plays in the Discord. There was Space SPCE, which made a decent 10-12% move. So still coins, still assets all around are giving consolidations, and they are giving opportunities for prospective plays. They have been building a decent trend. So very nice markets currently, guys, all around. You have trends everywhere. So this is the dream of a trader who trades on any time frame. Apart from, in case you're an investor, or you're somebody who's biased to always shorting the market, I guess you've been in a lot of trouble. So if you really want to see weakness, allow the market to prove it, guys. If we do take out this daily level to the downside, yes, maybe you can short retest to further levels of support, which are much lower on the S&P 500. You can see the decent support. This, I guess you can see these two zones. One is this about 2800 zone. The bigger zone is this 2600 zone. So if you took this level out, you could be looking for this play down here. But until then, you should be looking for structure in specific assets and looking to buy these the dips on those structures, because the trend is reflecting that that's what it is. But also a little note of caution when looking at this. I do have one very strong resistance level on the Nasdaq, which has confluence where we are currently. So still nothing's suggesting that weakness. We are making divergences on midterm time frames and still showing continuation. So it is what it is, guys. Just ride the trend and let it prove itself otherwise. So we're looking at the Dow Gold, and all I wanted to show you is essentially what we've had is this bearish retest. We had possible head and shoulders which did not completely manifest, but what we've done last week is, again, we've got a rejection from there. Currently we're holding this daily block, but this is another thing that is reflecting that this is not absolute strength in equities, because when they do that, you see them doing this. They basically grind into an uptrend against gold and eventually end up doing really well. Gold's been doing well since 2018, and currently with all the excessive printing, gold is very strong also. So it's very unique market conditions, but if technically we look at it, there is no strength in this pair. So when we're looking at risk on markets, we're looking at strength in this pair. I was last week suggesting that we should at least find support here, but we got rejected straight away, and currently we're building this tight range. So this is another thing, along with that resistance level I have on the Nasdaq, that does suggest that there is potential of suggestive weakness in the markets. So it is something to be aware of. Also, when it comes to seasonality, it is about the 15th or 16th of July that I had shown you a couple of weeks ago as the potential area, where seasonally the markets do end up starting to sell off. So that is another thing to be aware of. When you're being overly risky, just be aware of that. That seasonality and the Dow Gold chart is not completely supporting this overly bullish narrative. So just a heads up and something to keep in mind. So quick look at oil. So we've had this is the first time I mentioned it in the Discord. We got about a 4-5% move out of this, but eventually we did end up grinding up. Now what we're forming is a bit of a rounded top, and we have also a triple divergence with RSIs pointing to a potential move downwards in oil. So this is something to keep a lookout on, because this level, you have a divergence, a strong divergence, along with a major support resistance flip. So until this is turned into support, this 40 to 42 zone, until this is turned into support, this is a big resistance, and momentum is now leaning towards potentially coming back down, and we have to see what levels to look at. The really big level is down here, 27, but I don't know, I think it would take something quite significant to get such a deep retrace, potentially something to do with the virus, I wouldn't say, but a stronger level would be this swing level that we had in 2009. So this 30, 33, 34 level, this would be a nice level for price to come back down to, and maybe even take the stops out over here at 30, 31. So keep a lookout on oil. I mean, it has made that big move and stabilized, but currently showing this rounded top at resistance with multiple divergences. Here's a quick look at timber, and I had mentioned this once we started breaking above the yearly level. You can see we found support right here, and we made a 33% move. And look at the reaction from the levels that I've been giving out to you. Straight from the yearly level, we get a powerful rejection. So for me, currently I am out of this trade now, and it was a spectacular move. The last 3 months we have made 3 very big calls on commodities. One is the long in oil, one was the long in rice futures, and now this long on timber. So 3 very big calls on commodities. Something for you to learn, outside of the crypto markets. There is a lot of markets, and there's incredible amount of gains. You may think this is just a 33% move, but if you're playing this with options, you'd be making much more than what you would in your shit coins. So it's something to really be aware of, guys. You can see a lot of these markets, they chop about for really long periods of time. It can be years, but when they do get impulsive, that is the time to be taking advantage of it. And congrats if you've been watching and being able to be actionable on any of these calls, because they have given some really, really big moves. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments, and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!